So you're thinking about moving to Dallas, Texas, but you're also saying, wait a second, there's a huge market shift. And what we've seen recently is that all of a sudden it's gone to a buyer's market, or has it gone to a buyer's market, or is it still a seller's market? Interest rates are going up, price reductions. I mean, everything that's happening right now. Why would anybody in their right mind buy a house? Here's the thing though, we got to look at the data, we got to look at the information, and then also you got to ask yourself this question: is it a right time for me to buy anyways? Now, you know, what I love is my good friend and partner Travis always says, don't wait to buy real estate, buy real estate and wait. But ultimately, it has to be the best choice for you and your family, what you're looking to do. So if you're thinking about making that move to Dallas, I want to jump in my computer, just show you a couple of quick things on the historical standpoint. So hopefully this might clear things up, help you understand what's going on in the market right now. So let's take a look. Let's jump in here. Now take a look at this impact of rising rates on home prices. We've had significant rate increases before. I would say significant when we're talking about a percentage or two. The thing is that here's one thing to understand really quickly is that these rates of 2, 3, and even the 4%, that was to help us get out of a recession, out of a pandemic, out of something that nobody expected to happen at all whatsoever. So they did that to help encourage spending, encourage buying, and to get the economy back going. But look at this. We've seen this happen before where we've seen rate increases or real estate recession or recessions in general. Now, this is what typically happens for real estate during the time frames of these recessions. Look, we got October 93, we got 1996, 98, 2003, 2005, 2012. These were deemed the last recessions, and where rates increase. But look at this increase of 2.38%, 1.2. The main point is that home prices, as you can see, still increased over that time frame. And you look at overall, that was an average of 1.46. We still had an 8% increase in home prices, even during the times of what they call a recession. But if I go to the next slide, here's what you'll see. Home sales. Now, home sales did decline, but that doesn't mean people stopped buying homes altogether. The people that had bought homes just before that, or even during that time, still saw that price appreciation, but the home prices or the home sales did go down. This is something that happens in business all the time. Whenever companies raise their prices, they know they're going to sell less, but they end up making more money because they've raised the price. They've accounted that even though they may see a dip in sales, they're going to have an increase in profits. This is very similar to what happens in the housing market. Even though the interest rates are increasing, that can decrease home sales, but the appreciation of homes still, according to history, will happen. And you can see here during these times of these recessions, as the rates increased, home prices still increased, but home sales decreased. So on average, they decreased by 11%, but still had 8% in appreciation. That is a big difference. That's why when we talk to our clients, we always recommend, if you're buying this as a primary residence, ideally you plan to stay in this home for at least 2 to 5 years. If that's the case, look at this. Look at how long these recessions lasted: 14 months, 8 months, 19 months, 12 months, 13 months, 13 months. So even 19 months as being the longest. If you plan to hold your home for at least 2 years, then even if you lose value on paper, doesn't mean you lose value unless you sell during that time frame. That's something to keep in mind. If you can wait it out, which means back to Travis's point of buying real estate and waiting, as long as you don't have an outside circumstance that forces you to move or sell your home, you know, you may lose value on paper. That doesn't mean you're losing value unless you take action and sell your home in the middle of a recession. If you can sell your home, right? Because of course, who's buying homes in a recession? But people buy homes all the time in recessions, in times of boom, good markets, bad markets, seller markets, buyers markets, it doesn't matter. But yes, home sales are going to decrease. Appreciation is likely still going to increase. And look, here's another big reason is what's happening right now. Look at lending standards. Nothing like what we've seen in all of those previous recessions. The risk is almost non-existent now because the lending standards have gotten so stringent, and they really vet the buyers right now. And we've seen this over and over and over again. You've got to have good credit scores. You've got to have good income. You've got to have longevity of employment. All these things come into play. So they are looking, this is not like back in before 2008, whenever you can see the differentiation of the risk as compared to the borrower risk compared to the product risk. So they were back in that time putting people in homes they could not afford. Now, this day and age, it is simply inventory issues. The millennial buyers right now are the largest cohort of buyers we've ever seen, and the inventory just cannot keep up with that. Plus, you talk about everything that's happened with restrictions, with lockdowns, with tax increases, all of these things. Being here in the Dallas market, this makes it very attractive for people still wanting to move here. And then I want to cover this real quick as well. Look at the home price forecast from all of the major companies that track all of this. Fannie Mae, Freddie Mac, CoreLogic, HPES, NAR, Zelman, MBA. They're all still projecting home price increases and appreciation for 2022 on average 9%. Now, that's not the 25% we saw this last year or the year before that we saw here, at least in the Dallas market. On average over the last 2 years, 25% increase in appreciation. That's pretty significant, but still 9% appreciation over this year. Yes, that is going to bring the appreciation growth down. It just is making it a little bit slower versus non-existent. Again, Dallas has always been a pretty strong market, pretty stable market. Even during the last crash in 2008, we didn't see a significant drop in home values at all whatsoever. $600,000 homes did not drop to $300,000. You know, maybe the value may fluctuate 30, 40, or 50,000, but again, as long as you don't sell that home right at that second, then you can probably wait it out. And that's the idea of doing this. And that's why I want to stress this point, is that if you do have to make a move, if you are thinking about making a move, I bought my home in 2019, the one I'm in now, and my interest rate was 5% at that time, and I was ecstatic. Did not bat an eye at that. Did not even think twice. So that is something that, now people are going, oh, 5%, that's too high. But the reality is that, again, we hadn't seen 2 or 3% before. Now, I refinanced my house in the middle, all of that interest rate reduction at a 2.25. So even if you were to buy at 5% now and rates somehow got down that low again, you simply refinance if that's something you want to do or is in your best interest. But ultimately, the price increase, appreciation value, what we plan to see over here and what is projected by everybody is still going to happen. Maybe not as fast as it has over the last 2 years, but that is just something that real estate, hands down, by far, one of the most sound investments of all time, and continually rises and increase. Yes, can there be a crash? Absolutely. Can you time the market? But yes, there are people that can get lucky and do that, but ultimately, the people that time the market are the ones that are pretty much buying on a consistent basis. This is what they call dollar cost averaging when you're investing. Like if you want to put $100 a month into an investment account, that means you're doing it no matter what. You're buying whenever the market's up, when the market's down, when the market's flat, doesn't matter. You're just saying, I'm going to buy $100 worth of stocks, crypto, Bitcoin, whatever it is you're investing in these days. You stay consistent on buying those assets so that it doesn't matter. Now, you make money, of course, if the market goes up and you had all that you bought over the last 6 months at a down market. Yes, you can do that. But ultimately, you're just gaining or losing value on paper. It's when you go to sell is whenever you're going to make or lose money. Same thing with your home. So if you're buying this as a primary residence, you want to always think that you should be considering holding that home for at least 2 to 5 years. At least 2 years, because if you decide to sell, you can capture that capital gains without any tax up to $500,000. If you're a married couple, up to $250,000. If you're single, that's a significant amount to put in your pocket tax-free. And some of the people that bought a year or two ago, and especially the people that bought last year, which we had people last year that said, I'm gonna wait till this year. And now they're saying, well, I'm going to wait another year, right? So that's what happens. People do this all the time, is they always say, I'm going to wait, I'm going to wait, I'm going to wait for the perfect time. Next thing you know, 2, 3, 4, 5 years goes by, and that's the issue. But look at this. If you were to buy a home right now for $360,000, again, based on the amount of appreciation they project over the next 5 years, you'll still increase the value of your home almost close to $100,000, $96,342. that is kind of like having a side hustle of making an extra $20,000 on the side each year. Now, I don't know about you, but I would take an extra $20,000 each year, especially if you don't really have to do anything for it, right? Most side hustles require work, require you working after your job. I mean, it just takes a lot of work to have a side hustle. That's why they call it a side hustle, because you have to do it in your time off. But here's a side hustle of just buying a home, allowing it to appreciate over time. So this is accounting, the forecast, the history, all these different models, they still project that, if you were to buy right now, that you can almost look forward a gain of $20,000 a year in appreciation over the next 5 years. And I think that is extremely conservative and very reasonable amount to consider. Now, as an agent here in the Dallas-Fort Worth area, again, it has to come down to your situation, what you're comfortable doing, what you're comfortable not doing, and ultimately, we just need to have a conversation. That's what we enjoy doing, helping people. Our primary business is relocation. We help people just like you every single day move from California. We help you move from New York if you're coming from Oregon or Washington State. Those are the types of clients we're dealing with every single day, and it just depends. Some want to move, some have to move. And if you have to move, we have to find you a good deal. If you want to move, we have to find you a good deal. But the great thing is we've only got to find you one house, at least for the time being. We have several clients that are using the equity that did buy last year to buy their first investment property. So that's a really cool thing whenever you see them utilize that equity. So as things start to kind of cool off a little bit, now they have equity in their current home, they can pull that out, buy some homes right now, start to build up a portfolio on the sides. But if you're not into that, you don't want to have second or third homes, understandable. You could use that equity for something else if you wanted to. You could leverage it in other forms or fashion, but it all depends on you. Ultimately, we just want to have a conversation. If you're considering making that move, then we're happy to help you navigate that. This is what we do every single day. We absolutely love it. And again, so if you're going to move in 9 days or 90 days, feel free to give us a call, shoot us a text, or send us an email. We're happy to help you make that smooth move to Dallas. All of our information is in the description below, so feel free to reach out. Happy to help you out in any way we can. And until next time, well, we hope to show you around town.